Hey everyone, welcome back to Corporate Decoder, the place where we unpack the dense financial documents that shape our world. Today we are diving into a report that might seem dry at first glance, but has some wild performance numbers buried in it. We are looking at the Vanguard Chester Funds report for the period the 1st of October 2024 to the 30th of September 2025. Now, fund reports can be a bit dense, but stick with me because we are going to pull out the juicy details about how this fund actually performed. We do these deep dives to give you the real story behind the numbers. And if you like that kind of no-nonsense analysis, make sure you are subscribed to the channel. Also, for even more exclusive content and to chat with fellow finance enthusiasts, join our Discord community. The link is in the description below. This is a certified shareholder report for a registered investment company. Essentially, it's a yearly check-in for investors, showing them how their money has been managed. The main purpose of this document is to provide a clear picture of the fund's performance costs and changes over the reporting period. The company we're looking at today is Vanguard Chester Funds, and specifically the PRIMECAP fund. They offer two main share classes: investor shares with the ticker VPMCX and Admiral shares, ticker VPMAX. This report covers the fiscal year ending the 30th of September 2025. Let us start with the hard costs. For a typical $10,000 investment in investor shares, the cost over the last year was about $40. That's 0.37% of the investment. For the Admiral shares, that cost was slightly lower at $32, or 0.30%. This tells us that Vanguard is keeping a pretty small slice of the pie, which is good for the investors. Now for the performance, the report states for the 12 months ended the 30th of September 2025, the fund underperformed its benchmark. That is a bit of a red flag, but let's see why. The report paints a picture of a market that was a bit shaky. Optimism about things like deregulation and tax cuts was often overshadowed by worries about rising interest rates and stock valuations getting too high. The Federal Reserve even started cutting interest rates in September 2025 because the economy was showing signs of slowing down and job growth was easing. Small, mid, and large company stocks all made gains, but large companies did better. Growth stocks also beat value stocks. This sentence is key. The fund had too much money in the healthcare sector, which went down. They also did not have enough in information technology and communication services, which were apparently strong performers that year. However, they did well in picking stocks in consumer discretionary and financial sectors, which added value. This shows that while the overall market had a story, the fund's specific choices, especially its bet on healthcare, didn't pay off as expected during this period. It's always important to look beyond just 1 year. Past performance isn't a crystal ball for the future, but it gives us a good idea of the fund's track record. Let's look at the cumulative performance from the 30th of September 2015 to the 30th of September 2025 with an initial $10,000 investment. This table shows us how the fund stacks up against major market indicators. For example, by the 30th of September 2025, an initial $10,000 investment in PRIMECAP fund, investor shares grew to $34,011. The S&P 500 index grew to $34,621 in the same period, and the Dow Jones US total stock market float adjusted index grew to $32,616. This means for this 10-year period, investor shares slightly underperformed the S&P 500. Looking at the average annual returns for the 1-year period, investor shares returned 15.41%, while the S&P 500 returned 17.60%. For 5 years, investor shares returned 15.15% and the S&P 500 returned 16.47%. And over 10 years, investor shares returned 15.03% while the S&P 500 returned 15.30%. This pattern is consistent. The fund generally trailed the major indexes over these periods. For Admiral shares, the numbers are very similar, with 1 year at 15.5%, 0%, 5 year at 15.23%, and 10 year at 15.11%, still slightly behind the S&P 500. Some quick stats: the total net assets of the fund are a massive $76, $359 million. That's about $76 billion. The fund holds 170 different investments, and its portfolio turnover rate is 11%. This means they buy and sell about 11% of their holdings each year, which is a relatively low turnover, suggesting a long-term investment strategy. Now, let's talk about where the money is actually invested. The biggest sector holding is information technology at 28.0%, followed by healthcare at 23.5%. Consumer discretionary is at 14.3%, and industrials at 12.9%. Interestingly, the report shows that the fund was significantly overweight in healthcare, which, as we mentioned, was a sector that underperformed. On the flip side, their large allocation to information technology likely helped them capture some of that sector's gains, even if their overall performance lagged the benchmark. A positive note here is that the fund reduced its expense ratio for both share classes during the reporting period. This is always a welcome change for investors, meaning more of your returns stay in your pocket. Let's move on to the Admiral Shares report, which shares a lot of the same performance information, but with slightly different cost structures and historical investment examples. Just like Investor Shares, Admiral Shares also underperformed its benchmark for the reporting period. The same market narrative applies. Economic uncertainties, interest rate shifts, and sector performance played a role. The key reason for underperformance is also cited as the overweight in healthcare and underweight in information technology and communication services. Here we see the cumulative performance table for Admiral Shares showing an initial investment of $50,000. By the 30th of September 2025, this investment grew to $204,253. Again, comparing this to the S&P 500's $207,648 and the Dow Jones Index's $196,051, we see that Admiral Shares slightly underperformed the S&P 500 and outperformed the Dow Jones Index over this decade. The total investment advisory fees are listed at $132,308,000 for the year. This represents the cost of paying PRIMECAP Management Company to manage the fund's assets. Now, this is where we get really granular. The schedule of investments shows us exactly what the fund owns. For communication services, they hold Alphabet Inc., Class A and Class C, Baidu Inc., Walt Disney Company, Meta Platforms Inc., and others. In consumer discretionary, you see names like Alibaba Group holding Limited, Tesla Inc., Amazon.com Inc., and Sony Group Corp. In the healthcare sector, which was a big part of their portfolio and a reason for underperformance, they hold significant positions in Eli Lilly Siamp Company, Boston Scientific Corp, AstraZeneca PLC, and Amgen Inc. For industrials, there is Siemens AG FedEx Corp, United Airlines Holdings Inc., and Southwest Airlines Company. Information technology, a large holding, includes Micron Technology Inc., Microsoft Corp., Cala Corp., Nvidia Corp., and Intel Corp. The total market value of all investments is a staggering $76,394,525,000, with a cost basis of $26,837,986,000. This means the fund has realized significant gains on its holdings over time. Looking at the statement of assets and liabilities as of the 30th of September 2025, the fund's total assets are $76,553,275,000, and total liabilities are $194,708,000. This gives us a net asset value of $76,358,567. The breakdown shows Investor Shares account for $5,232,879,000 in net assets, with a net asset value per S-share of $189.57. Admiral Shares hold the vast majority of assets, $71,125,688,000, with a net asset value per share of $196.44. The statement of operations shows how the fund makes and spends money. For the year ended the 30th of September 2025, total income was $996,026,000. Expenses totaled $223,178,000, resulting in net investment income of $773,048,000. The fund also had a realized net gain of $12,382,002,000. However, there was a significant change in unrealized depreciation of $2,584,337,000, bringing the net increase in net assets from operations to $10,570,713,000. This section shows the capital share transactions. For Investor Shares, there was a net decrease of $246,930,000 in this period. For Admiral Shares, the net decrease from capital share transactions was much larger at $7,580,628,000. This indicates a substantial outflow of money from the Admiral Shares class during the year. The financial highlights give us a per share view. For Investor Shares, the total return for the year ended the 30th of September 2025 was 15.41%. This is below the S&P 500's 17.60% for the same period. The expense ratio for Investor Shares is 0.37%, and for Admiral Shares, it is 0.30%. These are good expense ratios, keeping costs low for investors. The notes to financial statements provide crucial context. Under security valuation, it explains how they value assets when market prices aren't readily available, using fair value methods overseen by the board. They also detail their foreign currency translation policies and how securities lending works, including collateral requirements and risks. Looking at the statement of operations, the fund earned $927,157,000 in dividends from unaffiliated issuers. This is a substantial amount of income generated solely from dividends. Under principal accountant fees, it is interesting to note that for the year ended the 30th of September 2025, audit fees were $28,000, and audit-related tax and other fees were $0. This indicates a very focused engagement with PwC primarily for the audit itself. Finally, the report discusses the renewal of the investment advisory arrangement with PRIMECAP Management Company. The board looked at the advisor's investment staff, their process, and performance. They concluded that PRIMECAP's long-term approach and consistent management since the fund's inception in 1984 justified continuing the arrangement. They also noted that the fund's expense ratio and advisory fee rate are both below the average for their peer group. So, what is the takeaway here? Vanguard's PRIMECAP fund is a large fund with a long history, and its expense ratios are very competitive. However, in this particular reporting year, it lagged behind its benchmarks, largely due to its sector allocation, specifically an overweight in healthcare and an underweight in tech and communication services. While the long-term performance has been strong, investors should be aware of how the fund's investment strategy can lead to periods of underperformance. The good news is that management is keeping a close eye on costs and advisory fees, which is always a win for shareholders. Alright, that is our breakdown of Vanguard Chester Fund's latest filing. What do you think about their performance this year and their investment strategy? Do their long-term returns justify the recent underperformance? Let me know your thoughts in the comments below. If you found this deep dive valuable, please give this video a thumbs up and subscribe for more. And remember to join our Discord community for more discussions and insights. Thanks for watching, and I'll see you in the next one.